Hello everyone, this is Sebastian McMahon from IA Financial Group. I'm back with the weekly economic review, this time for the week ending July 26th, 2024. So another important week in the book. We had a second consecutive rate cut in the country. We had the first one of the year on June 5th. Now, July 24th, we had a second one. When we were listening to the Bank of Canada this week, we had the impression that the bar is pretty low for cuts at every single meeting until the end of the year. So we're thinking that we would have the first cut during the summer. We're right there, thinking four cuts in total in 2024, still likely, but now we think that the odds that we have 5 cuts in 2024 are certainly rising. Markets have been busy also this week. If you look at the markets at the close on Thursday here, especially in equities, we've had this sector rotation that's been undergoing. Tech and everything that was that did well until the year to date is starting to see some profit taking. We've seen a rotation into small caps. So lots of things going on under the hood. The US indices were of course more exposed to that, especially the Nasdaq. TSX, in fact, did not pull back that much this week because it's more cyclical, more value, so it helps here. Year to date, we're still close to 10% for the TSX, still close to 20% for the S&P 500 and Nasdaq in Canadian dollar, but now we're at about 14-15% in local currency. So still a good market, but we are starting to see this rotation coming in. And of course, August is usually a low liquidity month where you can have some volatility, you can have some market events. So it's very important always to not to take too much risks in your portfolios headed into the summer months. Price of gold has been on a downtrend since last Friday. Remember the last review, after 4 days it was positive. Friday was very negative, and we've been bleeding since then. But we're still at a healthy close to 15% year to date. Canadian dollar down on the week versus the USD following the rate cut in Canada. So talking about the Bank of Canada, so we had a second consecutive cut. So if you look at the chart on the left, 2 cuts in. There's still a long way to go before we're at neutral. The Bank of Canada estimates it is between 225 and 325 that you'll find the neutral rate. So middle point is 275. Let's work with that. We think that by the end of this year we'll be around 4%. At the end of 2025 we should be around 3%, so close to neutral. This is still what we think. What markets are pricing, you'll find in the table on the right here. 74% odds of a cut in September is what the markets are pricing. We think it's fair now. We're thinking maybe a pause in September and 2 more cuts. But now listening to the Bank of Canada, we think that it's very possible that we come in with another cut there. Markets are giving 50% odds of another cut in October. And then a quarter, 27% odds that we have a 5th cut in December. So we're seeing these possibilities gain some likelihood here in the markets. So it was very important to listen to what the Bank of Canada had to say this week. Guidance is very important these days as we're starting a cutting cycle. So if you look at the next chart here, this is an excerpt from the opening statement from the press conference by Governor Tiff Macklem. He said that now the downside risks are taking on increased weights in their monetary policy deliberation, and they are seeing more slack in the economy, and there's a risk now that the economy is not growing strongly enough and that this pushes inflation down too quickly. So that was some of the statements that he made. So you see how the psychology has shifted here. We went from having to wait until we're convinced that inflation was on a downtrend that would bring us back to target, to now thinking that maybe it's going a bit too quickly. Economic slack and labor market slack were 2 very important elements of the statements and the answers from the Bank of Canada, the monetary policy report this week. The chart on the right, I think, illustrates that pretty well. Last week we had the business outlook survey coming out. There's many components here, but here I brought the intensity of labor shortages. And if you remember, of course, 2021, 2022, we're always talking about intense labor shortages, but now see how the survey have flipped completely the other way. Now we're looking at the most negative answers to labor shortages since the great financial crisis. So labor shortages have disappeared. So that means that there is ample slack in the economy, in the labor market. That tells you a lot that, if you're the Bank of Canada, you need to be aware to make sure the economy doesn't cool too much too quickly. Thus, the idea that they will be cutting every single meeting until the end of the year. We don't think that it's going to be warranted to go with double cuts, 50 basis points or more, but cutting until the end of the year now is getting much likelier. Looking at the Fed now, a first rate cut in September now seems to be priced into the market. So next week on July 31st, we'll have Fed decision. The language that was used, all of the guidance points towards a hold next week. So we're not expecting anything on Wednesday. But now markets are starting to price, as you can see here, 93% odds of a cut in September. We think it's a bit early, to be honest. The economy, we had the GDP this week. The GDP came in very healthy, not too hot, not too cold. So good news there. Inflation is coming in slowly. Now we have the PCE report as expected, and on the left here you have the 3 months annualized change for a PCE total and core. So you can see it's coming down. But look at the next decision date. It's November 7th, which is just 2 days after the election. And of course, it's not a law of physics. The Fed can cut whenever it wants or hike whenever it wants. But historically, typically, they do not tend to start a new hiking or cutting cycle during an election period. They don't want to get into political turmoil and all of that. So do we really feel a rush for the Fed to start cutting before November? Do they have to go in September, or should they just use forward guidance and just, flag to the markets that, the cuts are coming by the end of the year? We might have 2 cuts, November and December, but maybe the moving in July and September is a bit too soon. This is what we would expect. So language will be very important next week at the next decision of the Fed, and the press conference by Mr. Powell will be very interesting too. But we would say that we are against consensus here. We do not think that we will have a first cut in September. We think it's going to be pushed further in the future, and that could bring some volatility in the markets if it gets depriced following the comments of Mr. Powell next week. So to be determined, but we would say that we're against the grain here. So the road to the presidential election now, looking at the polls and the market odds. So on the left you have the polls. Now Mrs. Harris is not 100% officially because it hasn't been voted at the Democratic National Conference, but she's de facto the candidate now. The polls are showing that she pretty much is still behind Mr. Trump in the same way that Mr. Biden was just before the announcement. So if you look at the polls, Mr. Biden was lagging Mr. Trump by about 1.9%, pretty much still the same thing. But here, as you can see in the charts, the odds for both, or at least the polling numbers for both, have come down since Mr. Biden took himself out of the race and Mrs. Harris joined. So that means that the number of undecided has gone up. So this will be likely a very important development as we move towards the election, how the undecided are swinging to one side or another. When you look at the market odds on the right, you see that Mr. Trump is still comfortably ahead for the election. Mrs. Harris is lagging here. And again, remember that this is an electoral college in the US, so there's a number of electors per state, and depending on the size of the population and the number of representatives that there are there. So what goes on in every single state is very important. So that brings us to the next slide here. If you look at the Electoral College, 219 are leaning towards Trump, 198 are leaning towards Harris. There's 121 in the middle in what we call, of course, swing states. So don't be surprised if when Mrs. Harris announces her VP candidate, could be at the convention between August 19 and 22, as Mr. Trump did, waited for the convention to announce that he was going with J.D. Vance. Well, don't be surprised if the nominee comes from one of those swing states. So 3 names that are making the round seem to be more likely right now. Arizona Senator Mark Kelly, former astronaut and former military, Pennsylvania Governor Josh Shapiro, and North Carolina Governor Roy Cooper. So those are the 3 favorites right now. There's still some time for Mrs. Harris to announce who she's going with, but we're seeing some good momentum from Mrs. Harris. In the first 48 hours of her campaign, she received donations of over $100 million from many small donators and new donators. So you're seeing some kind of momentum taking their toll here, but it doesn't show up yet in the polls and in the market odds. So it's still Mrs. Harris's challenge to catch up with Mr. Trump here. So what we'll be watching next week in Canada, we'll have GDP in May, plus 0.2% month over month is what's expected. S&P Global Manufacturing PMI will be coming out in the US, big week. ISM Manufacturing Index should be a bit stronger, but still below 50 at 49. Fed rate decision, no change expected. Language, very important. And we'll have an on-farm payroll, 175,000 new jobs expected in July is the number that we're looking at. Should be a bit below the 200,000-ish that we're seeing on average over the last 12 months, but still decent growth here. So that wraps it up for the week. Always a pleasure to serve you. If you appreciate the content, please share and make sure you come back again next week.